No, actually, it gives me great comfort. I don't really think we could do anything better to position our company in an inflationary environment than to convert our balance sheet to Bitcoin, because we basically built a balance sheet on a non-sovereign store of value that's not a currency derivative. 2 years ago, we were sitting on a bunch of cash, and that cash was losing about 10% of its purchasing power a year. And then when COVID struck and the Fed took a more accommodative monetary policy, that cash started losing 25% of its purchasing power a year. So my anxiety was maximized around April, May of 2020 when we had the K-shaped recovery, and I realized that cash is trash, everything's about to get much more expensive, and we needed a strategy. So we adopted a Bitcoin strategy. It's driven up our stock by a factor of 5. In my opinion, it saved the company from a not very pleasant fate. So I'm totally pleased with where we are today. Look, Bitcoin is digital property. It's universally acknowledged as common property because it had a fair distribution, no ICO, no management team. Satoshi disappeared. It's pari passu to a commodity, to land, to gold. And it's pretty important that it be deemed property. The rest of the cryptos could be securities. There's just a lot of regulatory overhang and question about whether they're securities or not. And I think that the great innovation is the creation of common property in cyberspace. It took us 13 years to get to the point where that's universally acknowledged. So that makes Bitcoin the safe haven for a public investor or a public company. Everything else feels more like either venture capital or speculation. I learned a lot of humility. We came public in 1998, so now I've been a public company CEO for many, many, many quarters. I lived to see 99% of my peers exit the business. So I didn't really understand this at the time, but now as I look back, what I realize is all my peers exited the business because they're forced to grow their top line and their cash flows at a frenetic rate, and eventually they get undone by dilutive acquisitions, and then they have to sell themselves. MicroStrategy, we've been very fortunate. We've been focused. We soldiered on. And we've always had a passion to make the best software we could. And as our competitors disappeared, we found opportunities.
You grew up as an Air Force brat, traveling around the world. What kind of kid were you? Tell us about your upbringing, a young teenage Michael.
I read a lot of science fiction. I read pretty much every science fiction book by all the great science fiction writers, probably 2 or 3 times. I played Dungeons and Dragons. Before we actually had these Wizards, Warcraft, and other games on computers, we actually had to draw out the dragons, and we had to write down what's in the dungeon, and we had to construct our entire virtual world. So I think before computers, we used our imaginations to create simulations and to exercise probability and distribution. And it taught me a lot about practical statistics. My background led me eventually to trip over a book by Robert Heinlein called Have Spacesuit Will Travel, where the protagonist gallivants across the universe, saves the human race from bug-eyed monsters, and for his services to humanity gets a full tuition scholarship to MIT. And it's stuck in my head that MIT was probably a good place to go if you believed in engineering and making the world a better place. Look, if you're going to invest in Bitcoin, a short time horizon is 4 years, a mid-time horizon is 10 years. The right time horizon is forever. Warren Buffett said, if you wouldn't hold it for 10 years, you shouldn't hold it for 10 minutes. So if you look at the course of 4 years, no one's ever lost money over 4 years holding Bitcoin. And if you look at, our experience, we started buying it at $10,000, and now it's up by a factor of 4. So given the right time horizon, you're fine. So it's a blessing and a curse. The blessing is it makes it the most exciting, interesting thing in the financial universe everywhere in the world. And the curse is it can induce anxiety for people that have a short attention span or are focused on a narrow time horizon. I think that there's a lot of dynamics here. If you look at the entire crypto ecosystem, You have a set of regulatory uncertainty, especially regulatory uncertainty around stable coins and crypto tokens, and whether or not they're securities. And that creates a little bit of anxiety. You have a lot of leverage offshore, right? You have a lot of crypto exchanges that can trade with up to 20x leverage. And those crypto exchanges have many, many tokens that are cross-collateralized, and between them and the DeFi exchanges, you can get much higher than 20x leverage. So that's a second source of volatility. The crypto markets are almost designed to encourage volatility, and that creates kind of a love-hate relationship between the crypto ecosystem and the Bitcoin hodlers. The Bitcoin hodlers are holding for, a decade, and sometimes for 100 years and sometimes for 1,000 years. And yet you've got fast money hedge funds that have a tax incentive, a huge amount of leverage, and massive volatility. But you have two totally different investment mentalities here. And when they come together, the result is you've got, in my opinion, the world's least risky asset to hold over the next century called Bitcoin. And you've got the world's most volatile, fast money market, called crypto. And they're both joined at the hip, for better or for worse, in the year 2022.
So clearly you're a hodler. But for the people who are terrified, who have never been on this roller coaster before, shorter term, what does the trajectory of Bitcoin look like to you this year?
I feel like it's consolidating at this level. This is a great entry point for institutional investors. I talk to high net worth individuals, family offices, public company executives, private company owners, and they watch Bitcoin run up in 2021. And there are a lot of people that would be afraid to own it if it was going up 400% a year. But if they're staring at it and it's 40% off the all-time high and it's consolidating, and they see that it's being embraced by people like Bill Miller, by very well-respected investors. It's being embraced by the regulators. It's being embraced by senators and congressmen and public investors and public companies. They're looking at this as like a good entry point. I'd be remiss, Emily, not to make a more important point, which is what's really going on here at a macro level is inflation. The CPI headline inflation is 7%. Look at the Turkish lira. It's collapsing. The peso is collapsing. So there's a volatility story for a conventional investor in Manhattan that's got a portfolio of equities. But 75% of the world can't buy the S&P index. They're in Africa, Asia, South America, and if they've got their assets in banks, they're going to have them seized. They can't buy the equity. So the real story here is digital property that solves a problem that 8 billion people face.